It's no longer news that the Western-led institution, the International Monetary Fund, has done more harm than good to African countries. Since independence, the IMF has advocated economic policies that would supposedly boost African economies. But despite the implementation of these policies, African economies have gone from bad to worse. It's no surprise then that some African countries have begun to reject the IMF policies. One such country in recent times is Ghana. The newly elected president of Ghana has decided to scrap several taxes advocated by the IMF, which the administration of former President Akufo Addo implemented. This decision is similar to moves made by the authorities in Egypt, as well as the President of Burkina Faso. The question is, why are these countries rejecting the IMF policies? What harms have these policies inflicted on the ordinary citizens of these countries? Let's find out. The former administration of Akufo Addo left a bleeding economy deep in a severe debt crisis for the new administration. The inflation rate is ridiculously high, debt burden has increased, the currency has depreciated, and the economic hardship is severe on ordinary Ghanaian citizens. Overall, Ghana is currently facing its worst economic crisis in decades. This is the situation that the former president left for President Mahama's administration to quickly fix. In a move to ease the burden on citizens, Mahama's administration announced a few days ago that it has scrapped several COVID-era taxes imposed on the citizens. These taxes were enforced by the former government of Akufo Addo in a bid to secure IMF funding. According to the finance minister Cassiel Atto Forson, 5 taxes deemed nuisance levies by the current government, including a 1% levy on mobile money transfers and a value-added tax on motor vehicle insurance, are being cancelled. He made this announcement while presenting the 2025 economic budget. According to the finance minister, we inherited an economy in deep crisis, hard hit with debt, and beset by other fiscal challenges such as large accumulation of arrears, energy sector financing shortfalls, and large fiscal risks from the cocoa and financial sectors. However, with the economy in distress partly due to debt mismanagement and financing shortfall, concerns are now being raised on how the new government can close the resulting revenue shortfall from scraping the taxes. But the authorities have stated that Ghanaians are already struggling with soaring inflation and a depreciating currency. So, removing the taxes will help to reduce their burden a bit. As for the shortfall in revenue, the government has announced that it will introduce an alternative measure. The removal of these taxes will ease the burden on households and improve their disposable incomes, Forson told lawmakers in the capital Accra. In addition, it will support business growth. The other scrapped levies are a 10% tax on lottery winnings, an emission levy on industries and vehicles, and a 1.5% tax on unprocessed gold from small-scale miners. Before we proceed, here is a reminder to like this video, drop a comment, and subscribe to our channel so that you can get more videos like this. As earlier stated, these taxes were introduced as part of efforts by the previous government to reach a $3 billion International Monetary Fund bailout, which was eventually secured in 2023. In simple terms, Akufo's administration introduced these taxes in order to secure a $3 billion loan, which they got in 2023. But the question is, what was the impact of the loan? Despite the fact that the $3 billion loan was obtained, the effect of it did not reflect in the economy. The only thing it achieved was increasing the total debt of the country and increasing the burden of ordinary citizens who were forced to pay those taxes. Can you see how IMF policies have harmed the Ghanaian economy? However, the finance minister has assured Parliament that the new government under President John Mahama, elected in December, had managed to stop the bleeding. He said that plans are in place to amend the Revenue Administration Act to improve tax revenue collection, which is expected to yield an additional 0.3% of GDP. Additionally, the government wants to enhance road toll collection this year as part of its infrastructure development initiative, dubbed the Big Push. Beyond removing the taxes, the government of Mahama has also pledged to make steep spending cuts this year aimed at recovering the economy. Authorities believe that the spending cuts will help Ghana to achieve a real GDP growth of at least 4% and an inflation rate of 12%. Experts such as economists Daniel Amatai and Imprempi have praised the government's move. According to him, The removal of these nuisance taxes will put money back into the pockets of citizens and help businesses recover. However, the success of these measures will depend on the government's ability to boost revenue collection without increasing the fiscal deficit. Additionally, the government is setting up the Ghana Gold Board to help regulate and manage the sector, with the aim of increasing foreign exchange reserves and stabilizing the local currency. This move made by the new administration of Ghana is one that every African country should emulate. But Ghana is not the only country that has made such moves in recent times. Last year, the administration of Egypt made a similar move to ditch the IMF and its policies and begin to look inwards. For almost a decade, the IMF has been the director of the Egyptian economy, dictating which economic policies to be implemented by the government. However, in all these times, the Egyptian economy has only gone from bad to worse. The situation became even more terrible as citizens struggled to afford their basic needs. Take March 2024, for instance, when Egypt signed an $8 billion financial support package with the International Monetary Fund. This package, however, required that it would have to reduce subsidies on fuel, electricity, and other commodities, and also allow its currency to float freely. What this simply means is that the Egypt government would have to stop paying a particular amount on these commodities that allowed citizens to easily afford them, leading to an increase in the price of these commodities. Now, in exchange, the IMF package would unlock billions of dollars in loans from the World Bank and the European Union, which, don't forget, would put Egypt in more debt. The Egyptian government did as the IMF suggested. But then, as you can imagine, the price of basic commodities went up drastically. In June 2024, for instance, it raised the price of bread, which used to be subsidized by 300%. In October 2024, Egypt had to raise the price of a wide range of fuel products for the third time this year, with diesel and gasoline prices increasing by between 11% to 17%. And guess what? According to Egypt's Prime Minister, Mustafa Madbouly, the price of fuel would continue to increase till the end of 2025, meaning that its citizens would continue to suffer. As the cost of living is increasing in Egypt, so is the poverty rate, which has increased to almost 30%. The Egyptian pound has halved against the dollar, and the inflation rate has increased to almost 33%. But it's not just the citizens that have been affected. The government revenue has also been affected. According to President Sisi, Egypt has lost about 6 to 7 billion in revenue in the last 7 to 10 months. And he added that it might continue to lose more revenue for at least another year. Overall, the situation in Egypt is really bad, and the citizens have raised an uproar about it, saying that the government is not doing anything to fix the situation. But all that is happening right now is because of years of austerity policies implemented by the government on the suggestion of the IMF. This is why the president of Egypt announced that the country might have to abandon the IMF policies and look for another alternative. Speaking at a conference in October 2024, President Sisi stated that, as for the program we're engaged in now, and this is a message we're sending to ourselves and to concerned international institutions, the Fund and the World Bank and all the institutions, we are doing this under extremely difficult regional and global circumstances. He further added that the program we have agreed upon with the Fund, and that is an important matter that I am telling the government and myself. If this challenge will hurt public opinion, that people cannot bear it, we must reevaluate our situation. This will be the topic of discussion between Egypt and the IMF and World Bank during the IMF and World Bank annual meetings, which will be held this week. The question that is probably going through your mind is, if IMF policies are disastrous to the economy, why do African countries keep implementing them? Well, you see, Egypt, Ghana, Cameroon, Nigeria, and every other African country needs funds to run its economy. And the World Bank and IMF are global financial institutions that were created to help countries in times of financial needs. The World Bank was initially tasked with the responsibility of providing loans to rebuild post-war Europe, thereby supporting the continent's long-term development. However, today its mission has expanded to reducing extreme poverty around the world by providing loans. The IMF, on the other hand, was created to oversee the stability of the world's monetary system. However, these institutions were created by the West, meaning that every decision and policies they make and advocate is based on the principles and ideals of the West. This is why, when the IMF and World Bank lend out loans to countries, especially from Africa, they usually add conditions in exchange for the loans. One such condition is that the country will have to practice Western ideologies such as democracy and freedom of expression, such as LGBTQ rights. So, if a country doesn't support LGBTQ in its constitution, it might have to do so if it wants to collect a loan from the World Bank. This is why the World Bank and IMF blocked Uganda's access to loans last year, after it enforced an anti-gay law. But aside from this, there is another condition that the World Bank and IMF always attach to their loans. And based on research, we can boldly say that this condition is what has stunted the economic growth of the African continent and is also what has destroyed the Egyptian economy. This condition is based on neoliberal principles. You see, in exchange for loans from the IMF and World Bank, these institutions insist that African countries must implement their neoliberal policies in their economies. By neoliberal policies, we mean the government is required to cut down on government spending and practice privatization, austerity, and forced market liberalization. These countries are also required to devalue their currencies, leaving it to float on its own. However, the result of these policies have been disastrous on African economies. You see, the IMF and World Bank started advocating for these neoliberal policies in African countries as the solution to their problem after the independence period. Following independence, most African countries were vulnerable and shaky, and so their government decided to turn to the World Bank and IMF for help. These institutions agreed to grant African countries loans, but in exchange, they will have to implement the neoliberal policies. At the time, this policy was known as the Structural Adjustment Program. Believing that it would improve their economics, the governments agreed to implement the policies. But if you do an in-depth research, you would discover that those policies are the foundation of the problems faced by African economies today. Although most African countries dropped the policies, they are still suffering the effect of the policies today. This is because the policies opened the doors for Western MNCs to exploit and profit from Africa, all in the name of foreign investment. These policies also led to decrease in income, increase in poverty, and decades of recession and stagnation. However, despite this, the World Bank and IMF still continue to attach these policies as a condition for loans. It's as if they believe that the more African countries implement the policies, the better their economies will get. But isn't it insanity to keep on doing the same thing and expect a different result? Or maybe, these institutions do not want to see African economies get better. In fact, it wouldn't be an exaggeration to say that this is the case because the IMF and World Bank are Western-led institutions, and it's a known fact that the West does not want the progress of Africa. The World Bank and IMF were created to eradicate poverty in developing countries. However, these institutions have single-handedly created more poverty-stricken countries than any other institutions. It is for this reason that some experts have called the World Bank and IMF the biggest scam of the century. The situation in Egypt and Ghana is exactly what most African countries are facing today. For example, since 2017, the IMF has been heavily involved in the economic affairs of Egypt. And since then, Egypt has become the second biggest client of the IMF in the world. For some reason, the IMF has allowed Egypt to borrow in extraordinary decisions beyond the amount available to it. In fact, Egypt has borrowed $20 billion in 3 loans, in addition to a new loan of $8 billion over the next 3 years. The IMF has also become the godfather of Egypt's external borrowing policy, encouraging lenders in international capital markets to invest in its sovereign debt. And, as we said, the IMF has become one of the major architects of Egypt's economic policy over the past 7 years. Yet the economic situation has not gotten any better. Instead, it has become progressively worse. However, according to the IMF, its first prescription in Egypt, the Extended Credit Financing Program 2017 to 2019, succeeded in strengthening Egypt's resilience. And the economic problems that followed this program were simply the result of external shocks, such as COVID-19, the Russian war in Ukraine, global inflation, rising global interest rates, and finally, the Israeli war on the Gaza Strip. But if that were true, Why did these external shocks affect Egypt and its citizens more than most countries with similar income levels? Why did Egypt's inflation index explode more than others? Why has the value of the local currency deteriorated? Why has the food security index deteriorated? Why have education and health reforms not led to greater equality of opportunity? The data, however, tells the truth. You see, after the full implementation of the measures demanded by the IMF in 2017, poverty and hunger rates rose to all-time high levels, reaching respectively 32.5% and 6.2% in 2018. Between 2020 and 2022, 28.5% of the population in Egypt experienced severe to moderate food insecurity, and the undernourishment rate was the highest in that period. In addition, between 2016 and 2023, external debt more than doubled, rising from $55.8 billion to $164.5 billion, and its maturity structure deteriorated. Repayments due abroad within a year in September 2023 amounted to $51 billion, equivalent to about 1.5 times international reserves at the end of 2023. Furthermore, in the first quarter of 2023, the Egyptian pound was already the 6th worst performing currency against the dollar. All this simply reveals that it was the policies of the IMF and World Bank that pushed Egypt's economy to this state, like it did with other African economies. So what does this tell us? It's simple. African countries should ditch the World Bank and IMF and look for other alternatives to get funds. These institutions do not obviously mean well for African countries, so the best thing to do is to ditch them. This is what the President of Ghana intends to do, and this is what President Traore of Burkina Faso has done. You see, more than 30% of Africa's total debt is owed to so-called development organizations like the World Bank and IMF, whose loans usually come with certain conditions that African countries must fulfill. According to reports, these loans from the IMF and the conditions attached with them have contributed massively to the bad state of most African economies. This is why Thomas Sankara, in his critique of debt, stated that debt is neo-colonialism, in which colonizers have transformed themselves into technical assistants. Under its current form, controlled and dominated by imperialism, debt is a skillfully managed reconquest of Africa. And this is why during his reign as President of Burkina Faso, Sankara rejected loans and assistance from IMF and World Bank, and even tried to persuade other African countries to collectively refuse to pay their financial debts to their former colonizers. In a bid to follow in Sankara's footsteps, Ibrahim Traore, the current president of Burkina Faso, has taken a similar initiative. According to recent reports, Traore has turned down financial assistance from the IMF, showcasing his commitment to safeguarding his country's long-term interests. Traore believes that countries that are indebted to these organizations will never achieve economic independence. This is the reason he made this bold decision, and it demonstrates his dedication to prioritizing the well-being of his people above all else. Aside from interfering in the economy of African countries, receiving loans and aid from the IMF and World Bank also opens the way for these organizations, which are headed by the West, to interfere in the political affairs of African countries. This interference has created a breed of African puppets who act in the interest of the West. However, Traore has been quite vocal against the interference of the West in African matters and has made it clear that he will not tolerate any form of Western intervention in his country. The fact is that the West wants an Africa that is forever dependent on it because it gives the West a leverage to continue the centuries-long exploitation. It is for this reason that the West, through the World Bank and IMF, impose neoliberal structural adjustment programs across countries of the Global South over the past 40 years. These programs, which are a condition for African countries to receive loans from them, are focused on privatization, austerity, and forced market liberalization, which have created lucrative profit opportunities for European multinational companies, but have had a devastating effect on Africa. Guess what? During the 1980s and 1990s, where most African countries were trying to stand on their feet after their independence, these programs led to decrease in income, increase in poverty, and decades of recession and stagnation. To this day, they continue to impact negatively on every aspect of the company. It's because of these so-called structural adjustment programs that the African continent could not catch up with its counterpart, thereby widening the gap between Africa and the rest of the world. With this, you can understand why the tribunal deemed the World Bank and IMF guilty, calling them the biggest scam of the century. The fact is that the World Bank and IMF have been scamming people and the African continent under the disguise of ending extreme poverty and promoting prosperity for everyone. In reality, they are doing the exact opposite by advising governments to cut down spending on essential services and privatize them, which make them inaccessible to poor people. Shift the tax burden from the rich to the rest by reducing income taxes and increase regressive taxes such as VAT, and pursuing an economic model that's flawed and sexist that favors privileged wealthy few who are mostly men. It's time for African countries to denounce the policies and practices of the World Bank, or else the continent will remain forever dependent on the West with no hope of freedom. What are your thoughts? Let us know in the comment section below. Don't forget to like this video, drop a comment, and share.